Hey, greetings. This is Dr. Jeffrey Scott. This is my weekend market update for June 8th, 2025. Doing this late on Sunday. I can't say I just got back from the Orange County seminar because I didn't make it back because flight delays in Dallas, diversions to Waco. Marcus, you should have taken up my plane back. You could have gotten direct flight from Orange County to Waco. Who would have known? And so I'm sitting in the Hyatt at the airport, and I had a few minutes, so I thought I'd give the weekend update. Weekend from hell for me. Great time at the Orange County meeting, but I started my weekend with a business trip on Wednesday, and I grabbed the wrong bag, and I didn't bring my computers for trading. So I had to build one before the meeting. That was fun. So let's get to it. Will inflation data trigger move to new highs? Is the question. Lots of data this week and multiple emails. The new one will be marketmripro@gmail.com, but I'll still respond to htsidoc at gmail or other emails. And the Google group is Top Down Trader. As always, this is for educational purposes only. Any recommendations should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. And I have tools for multiple platforms, but am an independent trader, and I am not a financial advisor. If you're looking for the wealth charts video, it'll show up sometime on Monday morning at stocksanddocs.com. This video will be predominantly Market MRI Pro. The meeting is over. I just have such a good time seeing all the old friends, the networking event. So big thanks to all those who attended, especially those who traveled from the East Coast like I did. My Google group is called Top Down Trader. There's no charge. There's not a solicitation. It's just where I post things. Often don't post videos on YouTube. I post them just in the Top Down Trader group, give you extra discounts on my tools and services. Is there a recession in our near future? There's always a recession in our future, especially when you've had a yield curve that went from inversion to crossing back above the zero line and certainly seems to be steepening. The question is going to be when, and you can see in all the prior dips below the zero line, you get the gray bar, but the gray bar is a variable time afterwards. So we have crossed over. We just don't know on both the 3 month, 2 years, and others when we're going to see us trigger the recession. Tariffs, big part of concerns. The Fed behind the ball as Europe has had two cuts. So there's a lot of moving targets, and I think the data, especially that inflation data that comes out this week, will be very important. From the credit tightness, we don't have it. And if we were in the midst of a recession or going into one, you'd expect it to spike. And then the Philadelphia Fed diffusion at -4 is well above -20, which is typically where recessions occur from. So, yeah, we got one someday, just not tomorrow. Know your news and earnings. As I said, big week for inflation numbers, the CPI on Wednesday, PPI on Thursday. Um, you're also going to see things like jobless claims and consumer sentiment. If consumer sentiment comes in lower than expected, that tanks the market. So we'll see what happens on the rest. Over here on the right, you can see we still have some big names, including, GameStop for those people that like to play that stock, not me. But Restoration Hardware, now known as RH, Adobe, Oracle's been really well performing this year, are all with earnings this week, the week of the 9th. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. This will be probably a quick one for me. It is late. I am tired and ornery after multiple flights were canceled. Here is the Friday view of the daily briefing. Bitcoin was up 2.4%. You can see all the major indices here were also up 1% or much or higher. The Q's just below that at 0.98. VIX was down 4.7. What I thought was interesting of all these major indexes, ETFs, the only one that finished near the top of the day was the Russell. The Russell is certainly outperforming the last couple of weeks. If you look at the new high, new lows, you can see we got new highs are greater than new lows on both the NYSE and the NASDAQ, and that's great. We need to see those numbers get into 3 digits, and I like to think that new bull runs are not built on new lows. When we look at the 5-day performance, just to show you the strength of the Russell, up 3.33, which was 50% greater than the move on the Qs and almost double the move. Actually, really close to doubling the move or being over double the spider and the diamond. So big move for the Russell. Let's see how long that will last. On the S&P 500 sectors, if we look at 1-day change, we can see that they were all positive on Friday and led by energy, discretionary, communications, and financials. Bringing up the rear, materials, real estate, staples, utilities. Certainly a rotation into more aggressive names and more growth, but everything was up. Now, over 5 days, the only thing that were down were discretionary utilities and staples. Kind of bizarre to me to see discretionaries and staples doing the same thing at the same time. Look at over the last 4 weeks, 20 days, you can see discretionaries up 5.34, while staples are only up 0.38 as the markets have shifted to a more aggressive posture. Leading themes, I like to look at the 1-day change here, sort that descending, and you could see blockchain, genomics, clean tech, marijuana, oil production, biotech are the ones up above 2%, but a very bullish looking pattern. Here we've got breadth on the S&P 1500, NASDAQ, and NYSE. You can see on the top is sectors that are positive, industry groups that are positive, and stocks advancing. The gray bars would be the prior market day, and you could see improvement across all three with 85% or so industry groups up, and 84%, 71, and 74% of the stocks up. A very bullish day in the U.S. markets. If we go and we look at the timing brief, this week was enough to flip the Russell to a buy. Therefore, on the weekly charts, all of my market ETFs in this slide, the spiders, Qs, diamonds, and Russell, are weekly buys, and they have been daily buys. So if I follow my model, then I have to consider that we have an uptrend, really one that's confirmed here with both daily and weeklies being up. So we'll talk about where we think that's going, but that's a nice feeling to have about the markets. If we look at the U.S. index ETFs, we've already talked about their performance, so I'm just going to talk about what they look like on a chart. A perfect V bottom, running up the V, bounced off of it on Friday, which is a super strong day on the spiders. Here's the all-time highs. Over here, we have the Qs, and they're a little bit further off their all-time highs, perhaps, or also off their all-time highs, also with a V recovery. The diamonds, again, a V recovery, now above the 200. So the top three all look really good to me. The Russell is trying hard, and it's trying to make up for lost ground. The last week or two have been strong. Now, can it get above the 200? So that'll be a big decision point. VIX was down, as you'd expect, and the dollar, which is way off of its highs, is really bouncing around an intermediate bottom. It's been lower, but it's certainly been a lot higher. If I take a quick look at commodities, gold is in a wedge, and you can see gold in the market on Friday was down 0.51. But look at our little friend silver. Silver, which has been a laggard to gold, is now not all-time highs, because you go back to 2011, I think, and there was massive height. But look at silver here, up 0.71% and touching what I think would be, let's put on the monthlies. Just see. So here is the 2010, 2011 massive run-up, but this is the highest bars that you've seen in silver in over 10 years. So silver is in a major bullish run here. Natural gas, let's get it down to daily, bouncing around the 200. And then you'll see that with a strong day in the market and improving sentiment, our 10-year was up 2.55%, closing at 450, and our 30-year was up 1.5%, closing at 496. I think that was a sign of positive that the market the market had some relief perhaps with the employment numbers. The economy is not tanking. A recession is not imminent. But I also think it takes some of the heat off the Fed. If we look at the buckets briefing, we look at the distribution of stocks into the deciles of their percent B from 0 to 1. And then we have the 11th bucket, we buckets how far above, how many stocks are above the Bollinger Bands and how many are below. Pretty much a neutral pattern. Improved from Thursday, neutral, 8% of the Russell are above and 7% of the NASDAQ are above their bands. Not a signal, too little. Market breadth, you can see the strength in the NYSE, a doji on the Nasdaq, but considering that it closed here, a doji after a big move on the Nasdaq. Down below, perhaps the only thing that disappoints me is the volume wasn't that exciting. You can't see the breadth indicators, the whites above the 50, stocks above the 20 in green, stocks above the 200 on both the NYSE and the NASDAQ turned up, but are not at extremes. And then if we just go down the middle, on the left, the NYSE, the right, the NASDAQ, you see new high, new lows are positive. Advanced decliners picked up a lot and up-down volume. The only signal down below we saw was the Bango, and that's kind of a rational exuberance signal, but you could see a lot of them before the market rolls over. Ratio charts give you a sense of how things compare to the spider. Bitcoin has weakened a little bit as the spiders got stronger. Now keep in mind, these are not sector charts. These are ratio charts of the sector versus the S&P. If the S&P is up and all the sectors are up, some things may outperform the S&P and they'll be pointing up like communications did, and some things might be underperforming like staples and going down. So in this market, staples were down, discretionary was down, industrials are strong, healthcare is weak, utilities down, technology's on fire, real estate is weak. So the defensive plays are weak, financials not doing anything, energy's really coming off of a bottom, materials have pulled back, communications are okay, technology and industrial. So it's a market that not everything is performing the same. Lastly, my JEA slide is how I look at the stocks, and I look at my impulse view, which includes 3,500 plus or minus stocks from the NASDAQ, the NYSE, and the Amex filtered for $1 and 100,000 shares. And it just gives me a glimpse into what the market is doing. I go into my top-down view, and each of these are put into their appropriate sectors. In fact, I can show you here that every one of the stocks is attached into a sector and into an industry group. One challenge of any data provider is we do have a tendency to get new issues added, and it takes a while, a couple days, for them to be put in the right sector group. So if we look at the leading was energy, financials, healthcare, and technology, let's just clip on those four. Then here are the industry groups that are in those four sectors. Down below are the stocks, 1900. That's too many to look at. This blank one here is one of these things that has things that are not classified correct that we find and we adjust. So let's look at industry group by performance. There's this one here. And then what I want to do is I want to make sure I got that right. I do. I want to actually, what I want to do here is identify just those industry groups that the leading 10 out of those four. So 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. So these would be the 683 stocks in the leading industry groups in the leading sectors. Now I want to trim that list by removing stocks less than $5 and 500,000 shares, and that leaves me with 285. And these are the stocks that I would be starting my analysis on. So let's look for stocks. Let's add in an uptrend to this. And then let's rank them by up dots, and let's take a look at what we see. PVBC, we looked at this over the weekend. I like this a lot. Let me point out why. Massive volume. Let me make sure this wasn't the buyout. Yeah, this is a buyout. That's what we saw. So we love the breakout, but it's a takeover. BPOP was a messy looking chart, although it had a nice move. Let's see what we got. It's got a nice breakout here, but it's kind of a loose. VAL, Valaris Energy. I think these are in the services side. It's making a nice recovery. I'd wait. First, I'd rather wait till it breaks above the 200. It's often a place of resistance. UMBF. Now, if you think about it, energy has certainly rotated of late, and I'd rather see it breaking out, not sitting on the bottom there. And as energy's rotated to the top, the stocks for an intermediate turn are lagging, and you see that. This looked interesting. If you want to look at a regional bank that I think is tied somewhat to the oil model, oil business, this is Texas Capital Bank shares, and you can see it's moving above the 200 after a pullback in an uptrend on great volume, breakout momentum, good relative strength in OBV. That's one that I might look at. RXRX, let's look at this one. I think this one looked interesting too. I just don't like them this far below the 200. Again, it's a cheap stock. Just looking down here, many things that I remember, from a fundamental perspective, I think this company here, which as you could see has been a laggard for quite some time, Legend Biotech, which I talked about after ASCO, the big cancer meeting a couple years ago, back here probably, well, in 23. There's a new type of therapy called cellular therapy, and their treatment of CAR T is what we call it specifically, is the best in the business. And it had great data at the recent meetings. It'll probably lead to expansion of sales. Look at the volume that's come in. Again, it's below the 200, but a lot of biotech is beat up. That's one that looked interesting to me. And let's see, AROC is in oil services, I believe. And this one is in an uptrend with a pullback and a breakout. I like this one. Relative strength and OBV look good. CPR and momentum, breakout. I thought that AROC looked interesting. That's how I like to start, and that keeps to my true nature of being a top-down trader. What I also have is I can't help myself, so I like to go into back to my impulse view, which is over here, and I like to go in and run a couple of scans. So one of my favorite scans is a 2-day momentum up. Price and volume are already there, and I want to show you APPS. Now, I already have a position in it, but APPS, which is sort of running up this line, had a pretty significant breakout on Thursday and Friday, and you could see volume breakout, two momentum dots from a squeeze, relative strength and OBV picking up. And one of the things that I've observed over the years is typically when you see these two momentum dots, which are the two dots above the yellow line, it typically precedes the beginning of a substantial run. We talked about it at the meeting, and that signal typically causes a big move in a stock with the first one. And what you typically see the next couple of days is a little bit of a pullback or retracement before it goes higher. I think the two dots in a row are significant, which is why I scan it. EWTX didn't do anything for me. Let's just look at it real quickly. And you can see here, I think this is makes things that are in your medicine cabinet in your bathroom, some of the over the counter stuff. And let's see what else we have. I'm just looking for a list of some stocks that I liked. I don't know if I kept it from the meeting, but I'll show you perhaps one of the positive ones that I'll be looking at this coming week in a moment. And so another scan I like is, let's drop this down, actually kill this because I got to go in there. And now let's just look at pullback in an uptrend at the massive list of stocks. Again, I want to make sure that I have my 5 and 500 here. We're going to hit OK. And make sure I rank them. Biggest number on top. Manchester United, they became compliant with some Premier League rules and the stock had a massive rally. Now, if this was on news about a new product or an earnings beat, I might be excited. I just don't know how to play that news. So that was one that I liked. BYRN, this is one that I'm actually in. And nice uptrend and then a big gap up on massive volume on Friday. So I always go look to see if it's being bought. And 565 announces preliminary fiscal second quarter record revenues of 28.5 million, compact retail expansion. So they pre-announced. How many of those do we see these days? That's pretty exciting, with a record revenue. So that might be an interesting thing to watch. Um, Massive volume, four dots, volume, gap, breakout, momentum, relative strength, OBV look good. And let me just push you with an oldie, but a goodie. And Amazon looks like it's setting up. So you're going to see Amazon, it's had a nice run off the bottom, pull back after the gap up, and is now heading higher. And what I liked about Amazon was in the weekly chart, one of my favorite signals was developed by a master trader and a friend of mine, John Person, and it's called the high close doji. So when you come in a downtrend and we're off the highs here, and you get a doji, and then you close above it, that triggers a signal, a reversal signal that, from in my experience, has been extremely attractive. Now this is funny. Pretty much I don't know why my formatting got messed up there, but that was up here and this one was down here. And so it's also popping out potentially from a wedge. So something that I'll be looking at tomorrow is Amazon as well. Have an awesome day in the US markets. They're trading a little bit lower overnight, but compared to what they've done over time, it is not a major move. Thanks, everybody. And thanks again to those that joined me in Orange County for our annual meeting.